Welcome to the Daily Update Podcast, where I'll go over the action in the market for Monday, November 24th, and we'll see how things look for Tuesday, November 25th. The S&P 500 delivered a strong bounce on Monday, opening near the 6650 level, dipping briefly in the first hour, then powered higher to close just above 6700, up 1.55% on the day. Combined with Friday's near 1% gain, that's roughly a 2.5% gain that we're seeing so far in the rebound. Volume was notably strong, even higher than Friday's option expiration day, which helps add conviction to the move. Leadership came primarily from mega-cap growth names. Google was up 6.3%, Tesla up 6.8%, with the broader growth complex participating aggressively. Small and mid-caps joined the party as well, a welcome sign of broadening participation. Technically, however, the picture remains mixed. The short and intermediate term trends still remain negative. The S&P is below its 20 and 50 period moving averages. Growth versus value and discretionary versus staples ratios are improving but remain beneath their key moving averages. Momentum readings are mixed to negative, and the ADX trend indicator has fallen below its moving average and below 20, signaling a return to a non-trending environment. On the positive side, the long-term trend remains intact. The S&P 500 continues to hold above its 100-day and well above its 200-day moving averages. The 100-day acted as firm support last week. The anchored volume-weighted moving average and the lower band of the Ichimoku cloud also are holding for support. Some key developments in Monday's session. The Gamma Exposure Index has flipped from negative back to positive above the 6664-6700 zone, which should provide some tailwind on any move higher. Sentiment is improving, but still extreme negative below 25. The VIX did drop, but is still above 20, historically a headwind for forward returns while it remains elevated. Several Fed speakers, including Governors Waller, Daley, and Williams last Friday, have sounded incrementally more open to a December rate cut, and the market clearly likes that message. Breadth, smart money flows, and multiple oscillators, including stochastics, the force index, TTM squeeze among them, are turning higher or crossing their midpoints. However, risks and caution do remain. There's still a confirmed Hindenburg omen in the background. The McClellan oscillators and summation indexes continue to be negative, and the parabolic SAR remains bearish. Most importantly, until we reclaim and close above the 50-day moving average, the intermediate term trend has not turned positive. Looking ahead to Tuesday, November 25th, seasonality is strongly favorable. The week after options expiration and the second half of November historically perform well, but we'll need to see more follow-through and ideally a close above the 50-day moving average to shift the intermediate term bias from improving to negative to genuinely bullish. Without conviction to the upside, the risk of stalling or reversing under round number resistance at 6700, 6750, or 6800 remains elevated. The primary focus on Tuesday will be any additional Fed commentary and any headline risk. It is unknown what major economic reports will be released. In conclusion, Monday's bounce was solid. The internals and sentiment are improving, but we're not out of the woods yet. The long-term trend is intact, yet the short and intermediate term correction is not officially over until we see sustained upside follow-through, particularly from growth and mega caps, and a decisive close above the 50-day moving average. This week is a holiday week, and liquidity could thin as we start to approach Thursday, so expect potential volatility spikes and lower volume later in the week. Thank you very much, and I will talk to you in the next podcast.